on Business Edge this morning. Ken Gichinga, Chief Economist of Mentoria Economics, is still with us as we take a look at the trade relationship between Kenya and Tanzania. Now, for the first time under President Samia Suluhu Hassan's administration, annual commerce between Kenya and Tanzania exceeded 100 billion Kenyan shillings, indicating improved relations between the two neighbors. The latest official statistics show that the value of products traded between the two nations reached 107.63 billion Kenyan shillings in the 12 months ending in March 2022, an increase of 66.86% over 64.51 billion Kenyan shillings the previous year. Now, Tanzania is Kenya's principal supplier of grains, wood, paper, and paperboard. Meanwhile, Kenya exports the majority of its pharmaceuticals, soap, lubricants, iron, and steel to Tanzania. And so let's bring Ken on now, Kenya. But then the discussion is about Kenya and Tanzania this morning. So Ken, the volume of trade between Tanzania and Kenya has exceeded 100 billion Kenyan shillings. It has actually exceeded that 100 million mark. So tell us, how significant is the trade relationship between these two African countries?
Many thanks. That trade relationship has significantly improved since the coming to power of Samia Suluhu 1 year ago. We've seen trade significantly rise, but it's been largely in favor of Tanzania. If you look at Tanzanian exports to Kenya, they've gone up by about 114%, while Kenya's exports to Tanzania have gone up by 77%. So it's a win-win, but definitely Tanzania has the upper hand in this trade relationship.
All right, so both countries are members of the East African community. So tell us, looking at the region and other African countries within that community, are they also benefiting from this relationship?
Not quite. If you look at the growth with Kenya and Uganda, that growth has been quite modest. So this is something that yes, we have a number of states in East African community, but there's something extra special between Kenya and Tanzania. And when that historic visit by the Tanzanian president last year, about 14 non-tariff barriers were identified and eliminated. And I think that's probably the biggest reason that you've seen such a huge rise between those two countries. These are countries that really turned both about 60 years into independence. Obviously, Tanzania got it 1 year earlier than Kenya. So they are siblings of sorts. And it is significant to see those numbers rise as they have risen.
Well, we see stability between these two African countries, but then trade disputes are said to have popped up over the last couple of years. Now, the latest involved Tanzania increasing the cost of export permits from 27,000 shillings per truck to 52,000 shillings, according to border officials. And this was also done without any notice whatsoever. So what effect do you think this will have on the trade relationship between these two countries, knowing fully well that they came up with an idea or a policy that is not known to the other party?
I think you're absolutely right. It's a bittersweet relationship between Kenya, Tanzania, and Uganda. I think at the highest level, there is a desire to try and bring these two countries closer in trade. But the politics on the ground, the reality on the ground is, Kenyan farmers do not want the market to be flooded by Tanzanian products and vice versa. So there's always that reality on the ground where local, particularly with agricultural produce, where local farmers feel that imports, cheap imports from abroad are pushing them out of business. So that's always the push and pull that you face between these countries. And obviously, this being an election here in Kenya, the government will want to at least show that it supports its farmers. And that's why we might see some of these levies on things like eggs coming up, if only to put a face that that the government wants to protect its local farmers. So those two, the dynamics on the ground will continue playing, and it'll be interesting to see how the leadership will continue to manage it.
But then if you begin to see this form of staccato kind of policies and measures coming into play between these two African countries, don't you think it might just endanger the bilateral mutuality that exists between them?
I agree with you. Businesses like stability. Businesses like to be able to project the next 5 years. So you're having trucks and lorries at the borders filled with maize and them not being able to cross the border. Obviously, it damages the grain, it damages the business potential, and it puts businesses into losses. So obviously, the business community would not like to see these to and fro, this vacillation of policy. So it tells me that there are two competing forces that are at play. There's one competing force that really is about, buy Kenya, build Kenya. That's going to be a big force. And there's also another force of, trade is better. We are better together. And I feel these two forces, until it's settled politically, these two forces will continue to weigh against each other. And it's only until we get to some sort of equilibrium that the business community will get that stability that they so badly need.
All right, so Ken, talking about being better together and trying in their bid to try to foster that relationship, these two presidents actually met and they agreed on a series of agreements, so to speak, and they said that they would be eliminating about 14 identified non-tariff barriers in 6 months. So tell us, what are those barriers that they are hoping to put an end to make the communication and the flow of trade seamless?
Well, it's a whole raft of barriers. Some of them are looking at things around the phytosanitary standards. That's always a big. This is really what's the quality of grain crossing the borders. They need to have really aligned standards on phytosanitary standards, particularly on agricultural produce, because a couple of years ago there was a claim by Kenya that the grain coming from Tanzania was filled with aflatoxin, was not fit for consumption, and the Tanzanian government really tried to push back on that. The other things such as like COVID restrictions, COVID vaccination certificates for truck drivers, recognition of COVID certificates across the borders. All these things caused a lot of churn across the borders, and these are some of the things that I think had to be ironed out and accepted at the local level before we saw that trade relationship grow.
Well, even as they both try to manage their differences and peculiarities, one other thing they're trying to do is to see how they can iron out issues. And that is when in 2019, diplomacy came into play and they were able to resolve some other issues. But then looking at what exists between Tanzania and Kenya, are there lessons that you think other African countries can learn to help them better their bilateral trade among their communities or within themselves?
There are definitely lessons. Kenya and Tanzania have huge historical relationship. We speak the same language, similar culture. Some of the communities, such as the Maasai, really straddle between both Kenya and Tanzania. So it's easier to bring those relationships together. That said, I think it's also important to remember that governments have to have the interest of their own citizens as priority number one. So it's so there'll always be that healthy tension. So I think the lessons that other African countries can learn is it's important to cultivate those diplomatic ties, but it's also important to really be able to defend really the rights of the citizens that you represent. So having that healthy tension, or that staccato as you call it, is really part of bilateral trade in the 21st century.
Well, definitely, these are the kind of collaborations that we always expect between African countries, but then it will be necessary that they do not ride on their logs. If there are any changes, if there are any peculiarities, if there's anything that they need to change in terms of measures or policies, of course, it's always nice for them to come to the table and see how it will benefit the both of them before they carry on those changes so that we can put an end to friction and ensure that their trade blossom. Thank you so much, Ken Gichinga. Thank you so much for joining the conversation.
Thank you for having me.
And so on Business Edge, we'll continue with the conversation. And next is Crypto Watch. Do stay with us.
Joining me now is Ajibola Akamo. He's an analyst at Nairametrics. And while the crypto markets have been bleeding, it has not stopped people from joining the crypto train, I would say. Ajibola, welcome to Business Edge. Thank you so much for joining us.
Thank you for having me.
So even though we've seen a fair bit of hesitation from people because I think maybe of a lack of understanding around what cryptocurrencies entail and how they work, it hasn't stopped the adoption of cryptocurrencies. Now, Brian Armstrong, CEO of Coinbase Global, said that he thinks 1 billion people around the world will use cryptocurrency technology in one way or another by the end of the decade. So what really is driving this adoption of an alternative to cash?
Well, in my own opinion, I think that number is fairly accurate. And I believe half of that number, about 500 million people will come from Africa. And the reason why is because Africa has the most to lose. If you look at the failures and the shortcomings of traditional financial institutions, talking about the cost of sending money abroad, the issues of FX and people not able to get FX, and also coming down to the government policies only favoring some and not favoring everybody as a whole because of the contractionary monetary policies that we're seeing today. And even aside from that, we're looking at it from the perspective of the improved standard of living. People are looking for an avenue or a way to improve their standard of living in general. And they see the market, the cryptocurrency market, as an avenue because the market is very, very young. They see it as an opportunity for them to tap into something that has so much potential at a very, very young stage. And then, the potential for astronomical growth is also there. And even jump just beyond that, look at the level of devaluation of currencies we've seen this year. Look at its use cases, especially the reason why people focus on cryptocurrencies, are interested in cryptocurrencies in general is because of the use cases, especially when it comes to cross-border remittances and actually helping people and facilitating businesses in order for businesses to make quick and what's the right word here? Quick and swift transactions to make business more seamless than before ever, really.
So in your answer, you preempted my next question, which was to ask whether when Brian Armstrong was mentioning those 1 billion people, if it included the continent, and you've answered that. So let me switch it around now. Should we be surprised as to how quickly Africa has taken on to cryptocurrencies if we remove the age factor, the youngest population on the planet? If we remove that from the equation, should we be surprised at how quickly Africans have really just jumped on this train?
No, because, like I said before, Africans have the most to lose, right? For instance, look at the FX policies. I think right now, if you wanted to pay your school fees to a university abroad, you have a cap of $15,000. And then you have to wait another 6 months before you can do another FX transaction. If you are trying to get a source, if you're traveling and you wanted to get FX from the bank at the official rate, what happens? Yeah, I think the maximum they allow you to get is about $4,000 and you can't do any transaction again until after 6 months. So these bottlenecks have actually made it very, very difficult for people to access FX. And even going beyond that, the African continent has about 700 million people that have the lack of access to financial institutions. So, and cryptocurrencies are coming as a way, especially the decentralized finance aspect, is coming as a way to actually bank the unbanked, which is a problem that Africa is currently facing today. And even beyond that, we're looking at the Naira devaluation. The Naira against the dollar this year has literally, I think it's down about 8.5%. And even beyond that, we're looking at the growing use cases of cryptocurrencies for cross-border transactions. Today, for instance, my brother abroad can easily send money to my mom at any point in time. It doesn't have to go to some Western Union or any of these other places, right? And people are building in this space. Of course, people are worried about the risk in the space. There are a lot of theft going on. You could send your money to the wrong address. You could do so many mistakes in the space because it's a little bit complicated. And that's why we see the advent of Web3. Web3 is actually trying to ensure that the places or the cryptocurrency space is easier to access. And we have companies like Kurobo, for example, helping the space to grow in the sense that you are now able to recall blockchain transactions, a feat that was not possible about 5 years ago. So we're seeing these exponential increases in use cases, exponential increases in adoption, and more people are warming up to blockchain technology as a whole. And this is away from what we're seeing in the market, the price decline and whatnot. We're actually talking about use cases and how the market can actually help lives in Africa be better. So I think the cryptocurrency wave is not yet dead. I think that it's going to go on and on until we find the next thing.
So one thing we know about cryptocurrencies is that they have challenged the traditional banking system, the traditional financial system. And there have been many warnings. Even recent times, we heard from the Bank of England, which said because of these losses that the market had recently experienced, people would want to run back to the arms of traditional banking. But that hasn't really been the case. Now, with the adoption of cryptos representing a more fundamental paradigm shift, which is really on the background of blockchain, what's interesting now is to see central banks themselves, who mostly oppose digital currencies, now moving to create similar instruments called the CBDC, central bank digital currencies. So what do you make of that? The person who's trying to regulate, who's trying to tell all of us to be careful, is in some fashion or form also trying to enter into the game.
All right, so my own opinion on this is the only reason why they are scared of permissionless cryptocurrencies is because of the fact that they have no oversight as to what is going on in that space. Because permissionless cryptocurrency, for a lack of a better term, is literally the embodiment of what you would describe as a democracy, a government for the people, of the people, for the people, and by the people. Why am I saying this? So distributed ledger technology is divided into two. The permission and the permissionless. The permissionless is where you have blockchain, and that's where you have the known cryptocurrencies you have to Bitcoin, Ethereum, and the likes. While the permission blockchain is where the realm of CBDC is straight under, and that's because they have more control over an overview of the transactions that are going on in the permission blockchain. So the whole point or the whole idea behind cryptocurrencies is shift away from traditional organizations and traditional way of thinking, basically, and trying to put the power back to the people. People being able to control their finances on their own. And because of this, that is why a lot of people are not necessarily seeing the growth or seeing the use case for CBDCs, but are still going towards permissionless blockchain like Bitcoin and Ethereum, because every single day we hear about new things. We hear about different types of innovations. This morning, I just wrote a report on Nairametrics about a South African cryptocurrency organization that just raised $150 million to using blockchain technology to actually find a way to provide a clean water system for places in Africa that do not have proper water systems. And this is literally the first of its kind. And like I said, innovation over innovation. CBDCs aim to monitor. Right? We have the Naira, and some other places have their own CBDCs, and it gives the CBN the oversight to monitor the transactions that are going on, in the economy. Literally, with a CBDC, the CBN will know the first ever person you actually sent money to, who the person is, their BVN details, their NIN details, everything. The CBN will have that kind of information. So now it comes down to the point whereby, do you want the government to have this much
kind of information
about where your finances, exactly.
All right,
so
Ajibola,
the paradigm shift is.
Ajibola, I apologize, but I must ask this final question very quickly, because especially when you mentioned the South African company. Now, we've seen the Central African Republic launch its own crypto and a first African crypto hub where it promises zero transactions. So it's also legalized Bitcoin as official currency alongside the CFA franc. But in the midst of all of this, we've seen the crypto market go into a serious decline. So what do you think African economies should take note of? Because this is not something we can ignore. This is not something we can keep in the closet. It is here. Our young people are using it. And as much as possible, we need to protect the millions of Africans who are going to engage in cryptocurrency use one way or the other. So 3 things very quickly that you think African economies need to take note of.
All right, so for me, I would say the most important thing is to understand the market itself. I think the very, very most important use case for Africa for cryptocurrency is cross-border transactions and making business easy. So I think we need to focus on that aspect rather than the investing aspect of you buying to hold a certain cryptocurrency, because market volatility is there. I mean, Bitcoin over the last 4 or 5 years, Bitcoin has crashed 50%, I think up to 4 to 5 times, literally. And this happens regularly in the cryptocurrency space. It's a regular Tuesday for those that have been in the space for a very, very long time. So I think, the use case should be taking note of what, what cryptocurrencies bring to the table for the people. The volatility of the market needs to be taken note of. You can't express it enough. It is a very, very volatile market. People shouldn't jump into the market with, their 2 feet into the water. Basically, you should not do that, because like you can see, this year it has been a bad year all around.
Yes.
Bitcoin had its worst month in June, down 37%, and that's the worst month in 11 years. Bitcoin has never lost 37% of its value in a month in 11 years. And that shows you that, the volatility is very, very deep in the market. And aside from this, you also need to take note of regulation. I always advise regulators all around the world. We understand that this technology is something that you don't necessarily have oversight of. But at the same time, when you have a strong regulation on cryptocurrencies, it literally reduces the value and use case, because a lot of people will not be able to build in the space because they can't necessarily afford it. Okay. Or regulation is actually stifling that innovation. So regulators need to do more in that aspect. So of course, regulate the space, but don't be too hard.
So and not regulate the space to death. I'm very sure that's what you mean. All right, Ajibola, thank you so much. I know we'll be touching base with you as we keep our eyes on the crypto market, especially as the developments move around here on the continent. Thank you for joining me.
Yeah, thank you for having me.
All right, before we go, let's look at some stories we're tracking. Lekan Onabanko has NC4 to watch.
On NC4 to watch, let's tell you that Kenya is among the top 5 countries that have made significant progress in digital finance in the 2021 Global Findex released by the World Bank. The report shows that 79% of Kenyan adults now have an account either at a bank, other financial institution, or with a mobile money provider. Away from that, South Africa has failed to clean up and secure hundreds of abandoned coal mines after extraction and draining them of viable revenue. Human Rights Watch survey reports that these former mines now pose deadly threats to nearby communities. The Nigerian government has developed and issued an insurance guideline to drive the retention of oil sector financial spending in Nigeria and help reverse capital flight. The announcements came during the Nigeria Oil and Gas Conference in Abuja. Finally, Brent crude futures for September settlement edged up 0.2% to $113.73 per barrel early this morning. US WTI crude climbed 1.8% to $110.38 a barrel from Friday's close. And that's it on NC4 to watch. Back to Tolu now.
Thank you, Lekan. And that's the show we have for you today. Don't forget to follow us on social media. We are at News Central TV. And of course, you can download our mobile app as well as subscribe to our YouTube channel. Watch us on the platforms we are available and keep up to date with us, because we put Africa first in the news, in business, in sports, in lifestyle, in entertainment, in all areas that matter. Africa is our priority. Until next time, I'm Tolulope. Adeleru-Balogun.